In today's video, we're going to talk about 4 Canadian star stocks that have gained heavily on a year-to-date basis as we're inching closer towards the end of 2022. The S&P TSX Composite Index, which is the Canadian benchmark index and represents roughly 70% of the total market capitalisation on the Toronto Stock Exchange, with about 250 companies included in it, has declined nearly 5% on a year-to-date basis as of the 13th of December. The first star stock on the list today, though, is Shawcor, a leading energy and infrastructure technology company specialising in products, services and solutions in oil and gas, water and wastewater, fuel transportation and industrial applications. Shawcor shares have gained nearly 163% on a year-to-date basis as of 13th December 2022. In November of 2022, Shawcor sold its oilfield asset management operating unit to Force Inspection Services in a transaction generating at least 15 million Canadian dollars in gross proceeds. In its third quarter 2022 results, the company generated approximately $70 million of cash from operating activities during the quarter. And while on a consolidated basis, revenue was $335 million, income from operations $23 million, and adjusted EBITDA was $40 million for the third quarter of 2022. The company expects to deliver very robust adjusted EBITDA growth in 2023 from the core business, including a strong contribution from the pipeline and pipe services segment, with a significant second half contribution from the SGP project. Next on the list for you, Drilling Corp, which delivers safe and sustainable services and technology to the oil and gas industry. Precision shares have gained nearly 117% on a year-to-date basis as of 13th December 2022. Precision Drilling recorded $429 million of revenue during the third quarter of 2022, an increase of 69% over the same period last year and 32% compared to the previous quarter. The company expects fleet average day rates and operating margins to continue upward well into 2023. The company also expects the North American industry activity to further increase into 2023 as they anticipate near full utilisation in the high specification rig market, with customers seeking term contracts to secure rigs and ensure fulfilment of their development programs.
Right now, Kalkine is offering a 7-day free trial on its premium research reports. Get access to data-driven market insights combined with an in-depth analysis on financial markets across the globe. Don't miss it. Subscribe for the free trial now.
Next on the list for you, we've got Turquoise Resources, which is an international mining company focused on the operation and further development of the Oyu Tolgoi copper gold mine in southern Mongolia. Turquoise Hill shares have gained nearly 108% on a year-to-date basis as of the 13th of December 2022. The company's revenue for the third quarter of 2022 decreased by $271 million, and this was from $662.1 million in the third quarter of 2021, due to a 13.4% decrease in copper and a 67.2% decrease in gold production, which were driven by lower head grades from the planned transition of mining to the next phase of operations earlier in 2022. Now, the company believes that its third quarter 2022 has put them in a good position to end the year with a robust operation and with the project poised to reach a major milestone in the first quarter of 2023. The last stock for you on today's list of star stocks, Ensign Energy Services, which is a Canadian company that provides oilfield services for the North American and international markets. Ensign Energy's shares have gained nearly 94% on a year-to-date basis as of 13th December 2022. The company's revenue for the third quarter of 2022 was $432.6 million, with revenue for the 9 months ending to 30th September 2022 being $1,109.3 million. So by mid-2023, the company expects 7 of the 8 marketed rigs in the Middle East will be active and operating on long-term contracts. The company said that the outlook for oilfield services continues to be positive with steady demand for services and tightening rig supply, particularly in the company's North American operating segments. And despite the recent pullback in global crude oil commodity prices, demand for crude oil continues to improve year over year. Now, furthermore, OPEC Plus nations continue to moderate supply, and most recently announced supply cuts to current output, likely further tightening future supply. So with that, we have reached the end of this video. I hope you enjoyed that. Do let us know your thoughts in the comment section below. Thanks so much for watching Kalkine all throughout the year. Stick with us for 2023 for plenty more business insights and market news. Sage signing off.